The pressure is on as Apple gets set for its big product reveal. In today's cover story, 3D printing goes behind the wheel, plus the truth about paying off your mortgage before you retire, and Supermarket Sweep, how grocery chains are trying to get the groove on. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Tuesday, September 9th. In today's First Look, investors await Apple. The tech giant could come out with a wearable device and could even change the way we shop. In anticipation, Amazon is dropping the price of its Fire Phone from $199 to 99 cents. Home Depot confirms a breach. The retailer says it could have hit customers using debit or credit cards at stores in the U.S. or Canada as far back as April. It's 9 years of prison for SAC Capital's Matthew Martoma, who was caught in the most lucrative insider trading scheme in the history of the United States. And yesterday in trading, the Dow fell 26 points. The NASDAQ rose 9. The S&P closed just above 2,000, while gold dropped $11 and oil 29 cents. Trader Scott Gelady, CEO of Bull Reef Brokerage at TJM Investments, joins us on the show on this Tuesday morning. Happy Tuesday to you. We have a lot of news coming in, including President Obama will be talking about his ISIS plan tomorrow. Will that have an effect on the market?
Well, it'll have a better effect than no plan. I think that the market would like to see something coherent come from the Oval Office about what we're going to do with that problem, because it's only going to get bigger. They've known about it for quite a while now. So yes, the market would applaud a good plan, but ultimately it's still going to be about the economy.
The pound is getting pounded. What's happening there?
Well, you know what? I happen to have a British passport, believe it or not. I'm a dual citizen between the U.S. and Europe, the UK. And I think that, the guys that I talked to over the weekend said that it's way overdone. It's just one poll, and that poll was whether or not Scotland wants to secede and break away from Great Britain. So one poll had the breakaway vote a little higher than everybody else did, and that kind of really got everybody nervous about what might happen. So the pound got pounded, Scottish shares got pounded, but ultimately I still think that Scotland stays in Great Britain.
What are you thinking about the Apple trade for today with all these products allegedly coming out?
I'm going to sit back and wait and see how this works out. I know that there's a lot of Apple fans out there, and my family's got a lot of their products as well. But I want to wait and see on this one before you get too happy, because we are at some heady heights here. And to drive this stock a lot further, we're going to have some for sure results that the things are going better than expected. So wait and see on that one a little bit here. I'm going to be a little bit cautious and tepid.
Thanks, Scott.
Thank you.
Chuck Coppola is also on the Apple beat this morning. Good morning, Chuck.
Good morning, Angie. It could be a sink or surge moment for Apple's stock. That's as the tech giant is expected to unveil a new lineup of devices today, including an iPhone 6 with a larger screen, iWatch, and changes to its iOS 8 operating system. Ahead of the big event, shares traded just above $98. Jason Moser, an analyst with The Motley Fool, sees Apple as a long-term investment.
When we see companies like Apple that have established such a position in their market and run the business so well and grown sales so well and produce these products that just people continue to buy, we feel very optimistic about Apple even still today. So when we look at it as a long-term investment, we still have it as a buy.
The Wall Street Journal reports a line has already started forming outside of an Apple store in Tokyo.
Alibaba is also drawing a crowd. Reports say hundreds of hedge fund, mutual fund, and money managers are lining up to hear the pitch on investing in Alibaba. The Chinese e-commerce company intends to raise $21 billion, making it the biggest IPO in history. Alibaba shares are expected to price between $60 and $66. That stock could debut next week. In reaction, Yahoo shares jumped 5%. Yahoo has a 23% stake in Alibaba and stands to net about $8 billion by selling some of its stock. Also from the IPO market, Citizens Financial Group plans to raise $3.4 billion to become the biggest bank IPO in 5 years. The ticker is CFG, and Dave & Buster's has filed to go public. The restaurant and arcade chain will trade under the ticker symbol PLAY.
In today's cover story, 3D printers have made plastic panels attached to a traditional automobile frame. But now what's being billed as the first time a car body and chassis to come from a 3D printer is in production. It's happening this week at the International Manufacturing Technology Show in Chicago. This large 3D printer is drawing the body of a car using a heated mixture of ABS plastic infused with carbon fiber. It's an example of how far 3D printing has advanced the process of heating up materials, including titanium, into liquid form, then drawing as if with ink an image that hardens as it cools.
Machine tool industry is always about taking big things and making little things. It's just the complete opposite. You start with nothing and you end up with possibly your finished product. That is such a radical change.
This week at the International Manufacturing Technology Show, fabrication companies such as Cincinnati, along with the Oak Ridge National Lab, will put together mechanical components from suppliers including an electric motor from Renault to complete the car for Local Motors. That's an Arizona startup that's produced a range of vehicles through crowdsourcing design and crowdfunding for financing. The 3D printed part on this motorcycle, for example, the Formula One inspired Air Scoop.
In the next 5 years, we're going to put 50 microfactories up all over the world, and you're going to see Local Motors vehicles in your garage.
3D printing also has its artistic applications. Underneath this free-form 3D covering, somewhere is a Ford Torino, as structured as anything off a Detroit assembly line.
The 3D printing and the nanotechnologies, they are taking us to the third industrial revolution.
The 3D car will have far fewer parts, about 25 as compared with the more than 2,000 on most cars. Builders hope to take it for a spin this weekend.
Car rental company Hertz is still attempting to get on a better track. Hertz has hired turnaround specialist Brian McDonald as its interim CEO. McDonald has revamped Sunoco and Isuzu Motors. Hertz chairman and CEO Mark Vasora has stepped down for personal reasons. In June, Hertz officials admitted the need to review and correct financial statements from the past 3 years due to errors.
Tesla and Toyota may be hooking up on a new project. Tesla's CEO Elon Musk tells Autonews.com that the electric car company could partner with Toyota on another significant joint project within the next 2 to 3 years. Just a few months ago, Musk said that Tesla would wrap up its agreement to supply battery packs for Toyota's electric RAV4 this year. Tesla stock has been trading near a record high.
2 activist investors will take seats on the Walgreens board. The nation's largest pharmacy chain has been under immense pressure from analysts and shareholders, especially after deciding not to relocate its corporate headquarters overseas, plus coming out with a weak sales projection. Walgreens stock has also taken a hit during the past month.
Chiquita delays a shareholder vote on a planned merger with Irish fruit seller Fifes in order to consider other offers. The banana giant is now holding talks with investment firm Safra Group and Brazil's juice company Cutrale Group. The shareholder vote on the Fifes deal was to take place on September 17th. Chiquita has postponed that until October 3rd. That merger would have allowed North Carolina-based Chiquita to move its corporate headquarters to Dublin, Ireland.
An iconic American appliance company has been sold to a Swedish business. Electrolux is paying $3.3 billion to acquire GE Appliances. It places Frigidaire, Electrolux, and GE brands under the same roof. The combined companies are likely to have an effect on factories and jobs in the U.S. That deal still requires regulatory approval and could finalize in 2015.
Twitter is testing out a buy button. Investors sent the stock up 2.5% yesterday on word of a possible new wave of revenue. Reportedly, Twitter has been exploring ways to grow the e-commerce side of its business. Users would be able to make a purchase in a few clicks.
Young Americans are ditching plastic. Bankrate.com reports 63% of millennials are credit cardless. It's because they don't want to take on more debt than they already owe.
Millennials are really, really debt adverse. You know, this is a generation that grew up in an environment or was looking for a job in an environment where the economy was not that great. And on top of that, they have massive amounts of student loan debt.
That was Janine Skowronski at Bankrate. She says a drawback of the trend is that it takes millennials longer to build up credit scores, making it challenging to buy a home or a car. For young people who do have cards, she recommends building credit history by using alerts to pay bills on time.
America is consuming less soup. That is reflected in Campbell's sluggish sales and earnings report. The company turned in a 2015 profit forecast saying earnings will be between $2.45 and $2.50 a share. That was lower than analysts' expectations. Ready-to-serve soup sales also declined 8% in the quarter that ended August 3rd. The news sent Campbell's shares down 2.5%, closing at $43.
Panera Bread is the latest national chain to ask customers to leave guns at home. The casual dining chain says it recognizes everyone's rights, but that it respectfully asks people not to bring firearms into Panera outlets. Panera joins Target, Starbucks, Chipotle, and other national chains in banning guns from premises. On the economic calendar for today, it's a JOLTS jobs numbers for July. And on the earnings calendar, Barnes & Noble, Palo Alto Networks, Pep Boys, and Krispy Kreme. Still to come, is it time to plunk some money into small cap stocks? And the extremes grocery chains are going to bag customers. Plus, tips on tackling the biggest financial hurdle of a lifetime. Stay with us.
It's a dream come true for a small company that went public just a couple of years ago. Annie's Homegrown, that's an organic food company known for its mac and cheese, is being bought out by General Mills for $46 per share. Annie's stock popped 37% in after-hours trading last night. General Mills is paying $820 million in cash.
Paying off your mortgage before you retire is a huge plus. Joining us on set this morning, Joshua Kadish of RPG Life Transition Specialist. Thanks for coming on our show this morning.
My pleasure. Thanks for having me.
What are the stats of people who are actually able to pay off their mortgage before they retire?
The latest statistics put out from the Consumer Financial Protection Bureau show that there's 40% more people carrying mortgages today into retirement than back in 2001. And what's also scary about this is that the number of the loan amount is 82% higher than it was in 2001.
Why is it so critical to pay off your mortgage before you retire, if you can?
It's not a curse if you don't pay off the mortgage, but you have to realize it's probably your biggest single expense that you have. So if you don't have a paycheck coming in, you certainly want to make sure that that debt is out of the way.
What are some tips to help people get there so they do have it paid off by the time they retire?
I'd say there's three things people could do. First and foremost, set a retirement age so that you know when your goal is supposed to be hit. Secondly, understand what all of your expenses are going into retirement. And then third, run the numbers. Understand if you can afford to have a mortgage payment in retirement or not, and if you can actually support your lifestyle on what you have.
I'm a huge fan of writing a little bit of extra when I can, whether it's $5, $50, or $100 towards that principal on that mortgage. Does that work?
For sure. You know, you'd be surprised. If you can put in an extra $50, $100, even $200 a month, it's amazing how quickly that amortization schedule goes down and you can get that mortgage paid off much sooner than you may expect.
Now, some people say don't be so quick to pay off your mortgage because there are some tax benefits, but doesn't that really apply to people who are in the top tiers of the tax rates?
Yeah, and I would say, you know, it's really hard to take general guidelines out there. You know, get things that are specific to your situation. So if you can afford the payment, then maybe it does make sense to refinance and have a lower interest rate and have your money working for you, but it's really specific to your own situation.
I just think you feel so much better once you pay it off.
Oh,
have that burning mortgage party. Just enjoy it.
Absolutely. If we're going to put a hole in the ozone, it may as well be for paying off our mortgage.
I love it. Thanks for coming on the show. Come back.
My pleasure.
Coming up, a pro trader thinks small when investing. Plus, have consumers become too picky when it comes to groceries? Stay with us. Whole Foods wants to be the whole package. The grocery chain is testing free 1-hour delivery in 15 cities using online service Instacart to make it happen. The same-day delivery trend is picking up. Amazon is also testing a similar service. Whole Foods stock closed down 1% on Monday. Bill Mahler has more on the grocery groove.
Hey, have you noticed some changes down in the grocery aisle? Well, I really mean in the entire grocery store. Yeah, in cities across America, the selling of food has really evolved just as you, the consumer, has evolved. Wade Hansen, he's a principal at the food industry research and consulting firm Technomic. Wade, good to see you. Tell me, what is changing?
Everything's changing. The supermarket business has changed dramatically over the past several years. And the number one strategic priority of most supermarket chains today is developing the perimeter of the store. And so what we're talking about is all of those areas along the outer walls, primarily the prepared foods department, which is taking over their business. That is the emphasis of these stores.
Is that because that's the natural walk pattern of customers? They go on the outside first?
Well, it's two things. It's one, it is a traffic driver. It's drawing people into the store, but it's also proving to be a profit center for supermarkets. And it's a notoriously low margin business, low single digits in terms of profit margin throughout the store.
So it's all about volume.
But on the perimeter, they can achieve some increasing profits by offering some of these prepared foods. Now, in large part, it was always rotisserie chicken, fried chicken, salads, but the leading supermarket chains have taken it to a whole nother level by offering gourmet foods, ethnic cuisines, made-to-order offerings, and consumers have responded very, very well.
Wade, how about the structure? Because some of these new stores, and there are a lot of new players in the grocery sector, seem to, I mean, the overall layout, not just on the perimeter, looks to be different.
It is different. The center store is shrinking. We're seeing shorter aisles, we're seeing smaller frozen food departments, and we're seeing much more activity again on the perimeter of the store as they're building stations, as they're essentially having mini restaurants inside of some of these supermarket chains.
So what's driving this? Are they test marketing and this is something that consumers want?
It's absolutely something that consumers want. It is, we've seen a progression over time of the changing needs of the consumer. They want more local, they want more fresh, they want more convenience foods, things that are going to save them time, and they want things that are restaurant quality out of their retail experience.
Sounds like the older players have to catch up, because I don't see a lot of those older chains changing much.
They're changing incrementally, and for many of them it's not fast enough, because as we have some upscale and regional supermarkets coming into most major metro areas, whether it's a Bristol Farms in Southern California, whether it's a Central Market in Texas, or whether it's a Mariano's in Chicago, they're introducing new types of stores that are really capturing the attention of the consumer, and it's changing everything.
Fascinating. Wade Hansen from Technomic. Thanks so much.
My pleasure.
Thanks, Bill. The Chick-fil-A family is mourning a loss. S. Truett Cathy built a small diner outside of Atlanta in 1946. It later became a $5 billion fast food chicken chain, surpassing KFC in market share. In 2012, Chick-fil-A President Don Cathy made negative comments about gay marriage, setting off protests. Still, sales at Chick-fil-A have risen 47 years in a row. The chain's claim to fame? It's chicken and closing the doors each Sunday to give employees a break. S. Truett Cathy gone at the age of 93. We'll be right back. It's been a wonderful time to invest in big caps, but is it time to put some money to work in the small caps? Joining us now to talk about that is Matt Shapiro. He is president of MWS Capital. Good to see you on the show this morning.
Thanks, Angie.
Do you like the small cap sector here, Matt?
Well, I do, and it's always a part of the portfolios. And remember, Angie, when the Russell 2000 was the hottest thing ever? Well, this year it hasn't done anything, and what's hot now is that tight string of the prime large caps, the Googles, the Amazons, Gilead, that honestly are leading the charge in the S&P 500. But as you've seen, the Dow has not done as well. And a lot of actually small cap funds have completely been overlooked. And some of them are actually down for the year. So I do think investors should maybe take a look at the small caps, which are getting cheaper.
What stock individually in the small cap sector would you want to own right now?
Invest in what you would like, unless you do a mutual fund. One example is a company called Crane Corporation. Stock symbol is CR, and it's kind of a mini industrial cyclical company. Viewers obviously know I like these kind of companies. So Crane is in lots of fluid handling and hydraulics that go on, for instance, the 787 Dreamliner, stuff that goes in buildings, fiberglass and composites, even vending machines. So it's a little mini conglomerate. I mean, it has good profitability, pays almost 2% dividend, and its forward PE is only 13. So think of it below market. But of course, the sun hasn't really shined on the small caps so far this year.
Would you be a buyer of the Russell?
I would. I think this diversified basket of smaller companies is going to do well over time. And, theoretically, those stocks have a higher required rate of return. So they did great last year. 2014 is a little off, but as the market rises, people are going to search for that extra little growth and a part of this market that hasn't participated so far and is due for yet another leg higher.
Thank you, Matt, for coming on.
You're welcome.
It's time for us to take off for today. Coming up tomorrow, Resume Rescue, an update on the latest trends in resume writing that just might get you hired. From all of us at First Business, have a great day.